Hello, good morning. You're watching ET now, and this is Market Cafe with me, Vinny Motiwala, along with me, Shreyansi as well. Shreyansi, a very good morning to you as well. Happy long weekend that everyone had, I'm sure. But, markets, US markets seem a bit subdued in trade in terms of the handover that we've gotten, right?
Yeah, absolutely. That's quite right. So now when you're looking at the day that we've had on Monday on Wall Street, it was quite a losing day. The Dow and S&P 500 both finished Monday's session around 0.2% lower. And when you look at the Nasdaq composite, that also inched down nearly 0.1%. Now Monday's modest retreat in fact comes near the end of November's strong trading month. The Dow and S&P 500 are on pace to finish the month 6.9% and 8.5% higher respectively. Now, when you look at the tech-heavy Nasdaq, that climbed 10.8% in November. In fact, investors paid particular attention to stocks tied to online shopping during the Cyber Monday trading session. So, buy now, pay later stock Affirm was up nearly 12%. When you look at Shopify, that also jumped almost 5%. And Amazon also advanced 0.7%. Now, in terms of data that investors will be keeping an eye on, you've got housing prices as well as consumer confidence data. Now, investors will also track a slate of Federal Reserve officials that are set to deliver remarks throughout the day. So, do definitely keep an eye on those speeches. But US Treasury yields also slipped. Now, when you look at the yield on the 10-year Treasury, that was nearly 10 basis points lower, and it was around that 4.3% mark, Vinny.
Absolutely, Shreyansi. And you were talking about Cyber Monday as well. Now, Adobe Analytics actually highlighted that maybe we could see some record numbers actually coming in there as well. So it's going to be interesting to see. US surely saw a good record number, but in India also everyone was shopping as well. So we'll wait out for some of these retailers to come out with some numbers or indication of how Cyber Monday was as well for India, how Black Friday sales were going across there as well. But let's also talk about oil prices. Very interestingly, oil prices actually this morning were just slightly below that $80 per barrel mark. As of now, just at $80, you could say at $80 what oil prices are trading at. Slightly lower because what investors are waiting that OPEC Plus meeting that is going to be happening as well this week, and everyone's expecting a bit of an agreement in terms to curb the supplies for into 2024 as well. So yes, that's why we saw a bit of a fall coming in around the $79 per barrel mark was Brent crude oil trading at. And let's not forget, obviously in terms of the tensions that are going on in the international market as well, that was a bit of a easing that we saw in terms of Israel-Hamas tensions. So because of that, also geopolitical tensions easing is also leading to a bit of a subduedness in terms of oil prices as well. So it's going to be interesting to see how that shapes up. But let's look at what gold did this morning as well and how it's trading at. It was at the morning at around $2,000 per ounce mark as well. As of now, above that mark as well, trading higher as well. We're seeing a dollar dip as well. So yes, keeping an eye out on the commodity side as well. But obviously, geopolitical tension easing is something that could, aid in terms of the oil prices coming down. That surely works out well for the Indian markets as well. A lot of companies over there as well. So let's keep an eye out on that. In terms of more updates that we have right now, it's just come in terms of an update is that Saudi is seeking an OPEC Plus quota cut while some members are resisting it. This is according to agencies. So let's keep an eye out obviously on these data points that will be coming out for oil prices, Brent crude oil prices, and where they shape up as well through the week. That's going to be important.
Absolutely. Like you said, OPEC meeting outcome is definitely something that the market is looking out for. But you've also got other cues that are on investors' radar. Now you've got November series expiry. That will be in focus. You've got auto sales numbers later this week. That will be in focus. And you do have Q2 GDP data on November 30th this Thursday. So that will definitely be something that the market will keep an eye out for. Now in terms of likely D-Street Dalal Street debuts, you've got Tata Tech, Flair Writing, you've got Federal Bank Financial Services and Gandhar Oil. So a lot of action on the primary market front, Vinny. And in terms of IPO action, there's of course IRDA that is listing on the bourses on December 4th. On November 20th, you've also got some earnings counters. You've got Siemens that is reporting its numbers. On December 1st, you have ASJ Auto that is reporting its numbers. So those counters will definitely be in focus. Now, in terms of corporate action, you do have BPCL board that is going to be meeting to mull a dividend. So that counter would remain in focus, as well as Man Infra that will be mulling fundraise. So that counter would also remain in focus. And so will Dell Technologies in terms of global earnings on November 30th. So that is largely the list of cues that you should keep on your radar.
Absolutely, the list of cues that we'll watch out for, and obviously 1st of December, ASK Auto, that's a newly listed company that we're watching out for as well. But let's get in some updates coming in on the global front, and like I was talking about some on the Israel-Hamas front. Now, time for the latest from that is the war on Gaza, where the humanitarian truce deal that brought a pause to fighting has been extended by 2 more days. The extension means that at least 20 more Israeli captives and 60 Palestinian detainees held in Israel prisons will be freed. The total number of hostages released so far has been around 150. 33 Palestinian prisoners have been freed, bringing the total number over the course of the truce to 150.
Now, fast fashion Chinese retail giant Shein has confidentially filed to go public in the US after the long-standing rumors of the retail giant going public. Now, according to reports, the retailers could start trading as soon as 2024. However, it is unclear how much the company is currently worth. Now, to give some context for our viewers, a confidential filing allows companies to communicate with the US SEC and make necessary adjustments to their filings in private.
And the Chinese tech giant and TikTok owner ByteDance is reportedly axing hundreds of jobs in its gaming division, marking a significant retreat from a segment it has invested billions of dollars into a challenging market leader, Tencent.
Now, Foxconn Technology will invest more than $1.5 billion in an Indian construction project to fulfill the Apple supplier's operational needs. The said investment was made through a Foxconn subsidiary, Honhai, which has been registered in India's Maharashtra state since 2015.
Okay, that was the top global headlines that we had this morning across the globe, what's going on. But on that note, we're going to slip into a very short break. Don't go anywhere because we'll be back with more domestic update, more Asian update after this break. Welcome back, and you're watching Market Cafe on ET Now. Let's keep it going with more updates coming in on the domestic front then. And in an exclusive interaction with ET Now, Sumit Chaturvedi, the Air India CMD Campbell Wilson shared the airline's expansion plans, and he also talked about the merger with Vistara. Listen into what more they had to say.
Presently, we've got 3 A350s on the books. They're in the process of being having some modifications done to the interior, and we should get the first ones in India before Christmas, and then starting to operate commercial service sometime in January.
So last time we met, definitely you were in a different zone. We were starting a new journey, a new livery, a new brand identity. It's been 3 months. So how have these 3 months been for you so far? Are you on the way to the expected results as far as the change is concerned?
Well, this is part of our broader 5-year transformation journey, Vihan, and that encompasses all parts of the business, a very small part of which is the brand transformation. Obviously, we're very excited with the way that the brand has been received and the excitement that there is. I think as people are seeing the aircraft, they appreciate it more. And so we're just about in the next few to be rolling out this new brand across all of our touchpoints, all airports, all websites, new crew uniforms, obviously the new A350 aircraft. So this next 100 days is going to see the brand come to life. So the planning for the merger is well advanced. We've been thinking about it and working on what the merger plan is for many months so far. As you rightly say, we've got competition clearance from CCI. In fact, we've got it from all but one of the countries we need it from, and we expect the final country to come through in the next few weeks. Thereafter, we commence the process of the legal merger, and that requires a few more hurdles to jump through, but we expect that to happen perhaps sometime first quarter of next year. Thereafter, we merge the organizations, but we still have 2 regulated independent airlines. And so over the course of the subsequent 18, 24 months, we would be in the process of merging the 2 airlines together. And that process obviously is governed more by operations and safety as anything else. And then we will take a call in due course when we merge the brands. And that we're not rushing into. We'll wait till the point that Air India has elevated itself through fleet upgradation, through product upgradation and other things, so that when the merger happens, it's a merger of equals and ideally create something even better than both of the airlines today. So it's a long journey, but it's a journey that we're well advanced on and we're very clear about the subsequent steps.
Well, that of course is the word coming in from Air India CMD Campbell Wilson, but let's also listen in to what SEBI chairperson Madhabi Puri Booch had to say about delisting norms as well as other issues that was discussed in the SEBI board meeting.
Very happy to report that the commitment to using data for policy making is now, there's such a strong commitment that the board guided us that since the number of delisting applications, even over taking a long period of 5 years, has been pretty small, and therefore the data set is pretty limited. To draw very significant conclusions from that may be difficult, and therefore the board has guided us to go back and do certain further examination of certain data and do certain further consultation with certain stakeholders so that we have a better sense of this, since the data set was actually extremely limited. That is the reason that it was not done this time. The one change in the roadmap that has been agreed because as part of our consultation, if you recollect, we had said that we will move optionally to 1 hour settlement and then we will move to instantaneous. Now, what the market infrastructure and the brokers together have come back and told us is that the technology path that they need to take to get to instantaneous settlement will be much better if the first step we take is not 1 hour settlement but T+0. So there is a, I would say, in between step which has undergone a change based on the consultation. So their feedback was it will be quicker and less expensive to move to T+0 and then move to instantaneous rather than to move to 1 hour and then to instantaneous. So since that roadmap is now working out very well, we feel that the incremental benefit of inserting a 1 hour in the middle may not be there. So we'll move to T+0 and then instantaneous. The progress is very good. A lot of discussion has happened and the roadmap is pretty much agreed now.
Okay, let's move on. And recently, the Finance Minister Nirmala Sitharaman was recently speaking at one of these India Global Forum, where she actually spoke about the current global headwinds that the Indian economy might get impacted by, and which are out of our control as well. Here's an excerpt of that conversation.
Consumption is falling in many Western economies. Why should that affect me? It should affect me because our exports are so much dependent on the European market or the advanced economies markets, where if the demand is falling, our exports are going to be adversely affected. So that is one of the indicators that the challenges are posing downside risks. Similarly, the US Fed's interest rate policy and also the inflation situation in all over the Western economies. Interest rate being long for high for long is also having a bearing on how investments are going to flow into India. And the exchange rate, particularly for the Indian rupee versus the US dollar, is another factor on which I would think we have to keep a continuous watch.
Well, shifting gears then, Maruti Suzuki, India's leading car maker, has revealed plans to raise prices from next year, attributing the decision to overall inflation and increased commodity prices. While the exact percentage of the price hike remains undisclosed, similarly, when you look at German car maker Audi, that too has announced a 2% increase for its vehicles that is kicking in from January 1st, 2024. Sumit Chaturvedi is standing by with more details.
Owning your favorite set of wheels is going to be costlier. In New Year, Maruti today announced it's going to hike prices of its cars from 1st of January. How much of the rise going to be and which models, it is still to decide. Maruti is saying that the overall input costs have increased and it's not able to absorb all. That's why it's passing to customers. That's why now before buying a car in January, they should be prepared for a price hike. Not just a passenger car maker, luxury car makers, well, they have also announced price hike. Audi India today announced it's going to hike prices by up to 2% from January onwards. And it is also because of operational costs and commodity costs that have risen. But behind the scenes, the story is that generally automakers, they go for price hikes in January because they want to make profit, and they know that demand is going to come substantially in the new year. Maruti, well, it has been doing for many years the same practice. Audi also is doing the same, and December is generally a time when they give huge discounts and they, in a way, earn good profits in January. So it's a practice that happens almost every year. This time also, Maruti has announced the price rise. We expect others also to follow suit, and Audi also has done the same, and other luxury car makers are also expected to follow the suit in this way only.
Thank you so much for that, Sumit. But let's move on. And Life Insurance Corporation, a behemoth in the insurance industry, is embarking on a digital transformation journey with the launch of DIVE, that is Digital Innovation and Value Enhancement. Now, the chairman, Siddharth Mohanty, said that the focus is on revolutionizing the customer acquisition, making service like claim settlements and loans easily accessible through agents, bank assurance, as well as direct sales as well. Now, LIC is also eyeing the fintech realm, considering the establishment of its own division while incorporating 3 fintech companies as corporate agents. Now, anticipating market interest, LIC plans to actually unveil a disruptive product in December, offering lifelong returns and innovative features, promising a paradigm shift in the insurance landscape. So, interesting one to watch out for from LIC as well, Shreyansi.
And switching focus to the ongoing public divorce proceedings, Raymond CMD Gautam Singhania took to a personal email to his staff and board members. In fact, in the email, he assured them that at Raymond, it was business as usual. Singhania also highlighted their recent business expansion plans and the success, emphasizing on how the interests of consumers and other stakeholders is at the forefront for him. He's separating from his wife of 23 years, Nawaz Modi, and the couple are parents to 2 girls. They announced the separation right after Diwali.
And shifting gears, the central government has advised states to stay alert and review hospital preparedness and emphasizing caution. The ministry is reviewing measures against respiratory diseases during the ongoing influenza and winter season. Samir Dikshit is joining in with us to tell us more details on that. Samir, take it away.
After there is a massive surge of the respiratory illness cases in the northern part of China in the past few weeks, the union government is on a high alert mode. The health ministry has issued advisory dated November 26 to all the states, to all the districts, that they need to keep a strong check. They need to enhance the surveillance mechanism and to see if there are any such cases in India. And if so, then it should be properly detected, diagnosed, and reported to the Union Health Ministry. So far, there is no such respiratory illness cases that have been reported here in India, but the Health Ministry has issued advisory and has mentioned that strict surveillance mechanism has to be adopted by the state and by the district health protocol officer. The advisory also mentions that ILI or the influenza-like illness or SARI, severe acute respiratory illness, these cases has to be closely monitored. And if it is reported in any part of the country, then this swab sample has to be sent to the lab to detect the root cause and to diagnose it properly. So that sort of advisory has also been issued. In addition to this, the states have also been advised to further recheck the health infrastructure, to further strengthen the health infrastructure like the emergency bed in the hospital, the ambulance, the medicines, all these sort of things has to be rechecked by the state health department and has to be ensured that these are placed enough so that in case of any emergency like situation, it could be properly tackled. In addition to this, the advisory has also been issued that the operational guidelines for the revised surveillance strategy that was related to the COVID-19, it should be once again followed by the states. It should be properly implemented so that if any of these cases, whether it be related to the respiratory illness or even related to the COVID-19, it should be properly identified and should be diagnosed at the right time. So that sort of strategy has to be implemented properly once again. So this sort of advisory has been issued by the Union Health Ministry, but the big statement that the government is making is that there is no need to panic about, no need to alarm, because as of now, no such respiratory illness case like in China. It has been reported here in India. So yes, we need to be cautious enough, and for the same, the advisory has been issued to the states. The health infrastructure has to be strengthened, and one should keep a strong check that if any such case comes, it should be diagnosed at the right time.
Well, thanks, Samir, for those details. Now, it's been a bumper few weeks for IRDA. Now, after the stellar response of being oversubscribed 40 times for its IPO, sources say that the company could soon gain a Navratna status. Prakash Priyadarshi is standing by with more details on the phone line. Prakash?
Yes, we are learning from our sources that the proposal to upgrade IRDA as a Navratna company will be accepted soon. In fact, we are given to understand that it's under active discussion of the Ministry of Finance and Department of Public Enterprises, which comes under the Ministry of Finance, is likely to meet all stakeholders this week. This meeting is preferably going to happen on November 29 or 30, which is an important development coming in as far as IRDA is concerned. As you are aware, at present IRDA holds mini Ratna status, and granting Navratna status means that the company will have more financial freedom in order to take capital expenditure decisions. So that's a very important decision. And also, once there is a consensus between the stakeholders, Department of Public Enterprises will issue circular. So we are given to understand from our sources that the Ministry of Finance is actively considering this proposal, and a final decision will be taken very soon. Back to you.
Thank you so much for that update coming in, Prakash. Obviously, we're going to be keeping an eye out on that very closely. Tentatively, the meeting is likely on 29th and 30th of November. That's what Prakash has picked up from his sources as well. Keeping an eye out on IRDA as well today, as well as obviously the listing that's going to be happening as well. So interesting to watch out for that. But let's slip into a very short break, viewers. Don't go anywhere. We'll be back with more updates after the break.
Welcome back. Thank you so much for staying tuned in. Let's take a look at DLF. Now, the Enforcement Directorate carried out a search and seizure operation at the DLF headquarters for 2 days. The ED has seized multiple documents from the headquarters in relation to the Supertech case. However, the agency did not disclose the exact role DLF had in its Supertech probe. DLF has said that the company provided the ED with all relevant documents and added that the transactions in question were conducted in the ordinary course of business. Remember that the ED stated in July that 638 crores were collected from home buyers and borrowed from the banks, and they were diverted by Supertech Group to buy properties in Gurugram at inflated prices instead of completing existing projects in Noida.
Okay, let's get in some update that's come in where Paytm could be actually a very important stock to watch out for today, because what has happened, and in a filing that was revealed that Berkshire Hathaway has exited the company in a block deal, offloading almost 2.5% of the stake. Now, the buyers in this transaction include Copthall as well as Gizalo or Master Fund. They have picked up around 1.19% stake and 0.67% stake respectively in the company. So let's keep an eye out on Paytm. Worth to watch out for, because Berkshire Hathaway exit coming in there is an important key to watch out for. Maybe some pressure could come in on the stock as well, Shriyansi.
Well, absolutely, Winnie. And we also have Ansh joining us in the studio for the futures and options roundup. So, Ansh, take us through that.
Right, so let's start with Nifty first. Let's get the chart on the screen as well. As you can see in the chart, Nifty continues to trade just below the resistance of 19,850 for 8th consecutive session. Now let's see what happened in F&O segment. Open interest decline was 7.7%, showing long unwinding, indicating a bit bearish stance. Whereas on option front, we saw very active call writing at 19,800 strike and put buying also at the same 19,800 strike, which means traders expecting Nifty to take resistance here. Now let's shift our focus to what FIs did. Index futures, they added 4,200 long contracts, but they also added 2,200 short contracts. So net to net, we are seeing a net addition of around 2,000 contracts on the upside. Though the total long position has got stuck between 90 to 23% from last 14 sessions, the total long position based on actual number of contract has touched 54,000 contracts almost, which is the highest in a month. This is a bit positive sign for the market. So in a nutshell, overall data seems a bit cautious, but bottom line remains same. Nifty has to breach and close about 19,850 to 900 level to give some clarity on upside.
Okay. That's how the F&O snapshot is looking like. But, obviously, the real estate space, properties, all that has been in focus. We're talking about how demand trends have been shaping up in India as well. And let's not forget how Nifty Realty overall has performed as well. YTD basis, we've seen a 63% uptick. But now Jefferies has come out with a note on the realty space, Indian realty space. What are they talking about? Which stocks are they looking at? Let's go across to Mamakshi.
Yes, the real estate pack is in focus today. We have a note coming in from Jefferies, and generally when we talk about the third quarter, it is a seasonally strong quarter. And in fact, this time around, Jefferies has highlighted that the third quarter is off to a very strong start. In fact, pre-sales are trending nearly 25% higher on a year-on-year basis in terms of volumes in the top 7 cities. Inventories have also stayed low, which is in turn improving the pricing for most of these counters. And in fact, given all of these factors, a record Q3 is likely for the real estate pack, and that is the reason why they see possibility of upgrades coming ahead. The key beneficiaries of the affordable scheme are Suntec as well as Lodha. And when we talk about the sector valuations in general, they are about one standard deviation above their levels as well as near the 2021 peaks multiples, and this in turn reduces the re-rating headroom that is available. But nevertheless, they have highlighted that the relative valuation appears to be attractive for counters like Godrej Properties as well as Suntec Realty, and that is the reason why both of these counters are some of Jefferies' preferred picks in the real estate space. So all in all, a good outlook, a positive outlook is coming in from Jefferies on the real estate pack. So on the back of that, keep an eye out on all of these counters. Well, absolutely. Thank you so much, Vamakshi, for that roundup. But let's also take a look at the other stocks that we're keeping an eye on. Ansh, what are the stocks that you're keeping on your list?
Right, so IRB Infra will be the first stock in focus for today's trading session, as company subsidiary IRB Lalitpur Tollway Private has signed a concession agreement with NHAI for a project in Madhya Pradesh. The project involves paying upfront 4,428 crore to NHAI for tolling a 316-kilometer stretch. Apart from this, Cipla will also be in focus, as company has acquired an additional 15.1% stake for 81.1 million Moroccan dirham in JV Cipla Morocco SA, which now holds 75.1%. Fortis Healthcare is also in focus, as company will divest Fortis Muller Hospital to MGM Healthcare for sale consideration of around 128 crore. Lastly, KPI Green will be in focus, as company has received new order of 4.6 megawatt of solar power project from Sundrops Energia Private Limited. So keep an eye on the stocks.
Okay, Ansh, thank you so much for that. Keeping an eye out on all those stocks this morning. But, we have BSE that's going to be in focus as well. And why is that so? Because obviously these Indian exchanges have been benefiting from financialization of savings, rising of equity participation. And BSE is going to be benefiting because we have a note that has come in from Jefferies, where they've initiated coverage on BSE. They've given a buy rating and a target price of 2,700 rupees per share. The closing price on Friday was 2,170 rupees per share. So obviously clearly a very strong upside, almost a 24% upside is what they're seeing coming in as well. What they also highlight that they believe that BSE is actually going to be riding on that digitalization of the Indian capital markets, and obviously growth in equities, production innovation, stable fees versus other capital market platforms is something that could support the growth for BSE. that BSE can actually also leverage a lot of macro tailwinds along with headway into the derivatives to deliver almost 150% jump in its earnings in FY24 is what Jefferies is expecting, and doubling over FY24 to FY26. So obviously very, very bullish is what Jefferies is on. They believe the high volumes do not equal the high risk. They do not see any systematic risk from the high derivatives turnover growth that they're seeing, as it is masking the relatively lower underlying premium growth. So yes, they're quite positive on it. They believe the derivatives could make up almost 35% of BSE's revenue going forward. Diversified revenue streams could provide a longer and a better runway for growth for BSE going forward as well. So, surely very, very positive. They believe that, led by strong growth, margin upstick, BSE could actually deliver a 150% jump in its earnings in FY24, like I was talking about that as well. And stock is currently trading at 31 times 1 year forward PE versus RTA's 38 times and AMC's that are at 28 times. So yes, initiating a buy coverage, almost a 24% upside, 2,700 is the target price that they're keeping for BSE. We could see some cheer coming in for the stock as a BSE when you look at that as well.
Absolutely.
Today.
And when you look at the CLSA's India strategy coming in, Vinny, small and mid caps do look overextended. But what are the other things that they're talking about?
Okay, so yes, in terms of CLSA's note that we are talking about as well in terms of an India strategy, one, obviously, like you're saying, that small and mid cap, they believe that is overextended. Too much has already happened in the small and mid cap space. Further, the broader market outperformance may not be that easy now. We've seen broader markets have been outperforming, but they believe now maybe it's not going to be that easy of a runway of a growth that we could see for the broader markets. They believe banks are the most attractive as of now within this Nifty space. They believe banks are trading below the long-term averages for valuation, so they're liking the banks in this financial space as well. Big banks are quite undervalued and over-owned as of now as well. And obviously small and mid-cap bank valuations premium versus big banks are at around 8 to 10 year high. So that's a one to watch out for, and that's why they believe that outperformance may be something in that from small and mid cap is not something that could continue. Obviously, FIIs, domestic mutual funds are quite overweight on the banking space as well. That's interesting to watch out for because they're talking more about the banking side and how, maybe the larger banks are something, yes, over-owned, undervalued, something attractive they could find over there. Let's keep an eye out on that as well. And interesting to watch out for that, they're highlighting in terms of overall how small and mid cap is not doing that great or is not expected to go, do that well. And obviously in banks is going to be remaining the biggest overweight for the CLSA's India focus strategy as well. And let me look at some of the names that they are highlighting as well in terms of that, which include HDFC Bank, ICICI Bank, Axis Bank, IndusInd Bank. That is included in their portfolio. So quite attractive, and those big names coming in the portfolio, Shreyansi.
Right, and we also caught up with Sunil Kaul, who's the APAC equity strategist at Goldman Sachs. He likes stocks from the defense as well as Make in India theme for the medium term. Let's listen into a slice of that conversation.
We do like the mid-cap, selectively mid-cap stocks, especially those that are in some of the themes we like. For example, defense stocks, we are quite keen on the entire Make in India theme, the supply chain shifting that is happening. And many of these stocks do tend to be in mid caps, and so selectively we do like that pocket. But if we are hopeful on the India growth story, and we do think FII money comes back in, they tend to be more exposed to the large caps. And so one of the recommendations we have, at least heading into the elections into the next 3 to 6 months, is that look at the large cap laggers. Look at the large cap stocks that actually haven't performed for a variety of reasons, and they could get a bid heading into the elections. So that's what we are recommending.
Okay, that was Sunil Kaul, but let's look at a quick look at what the Asian markets are doing as of now as well. And when you're looking at it, subdued day of trade coming in there. Obviously, Australia's ASX 200, quite exciting, 0.5% uptick there. Nikkei and Hang Seng, those are the ones that are a bit subdued in trade. Both are trading in the red as of now as well. Kospi, Shanghai, managing to hold on to some bit of a green. Oil is easing as well. Israel-Hamas truce extension coming in. That's keeping a bit of a positive side actually coming in for the Asian markets as well. And obviously the Indian markets also as of now, the Nifty implied is at 19,874. 0.25% uptick is what we are expecting in terms of the opening. Let's keep an eye out on that. positive sign is what it is indicated as of now. Not much of a worry coming in. Even the US markets were a bit subdued, but nothing in sort of a red market that we're expecting this time. There was a long weekend that we had in the Indian markets as well. So let's keep an eye out on that. A lot of data points that will be coming out as well. Maybe how in terms of the sales that went on as well on the retail side, anything exciting that comes up will be something to watch out for, because US markets, IRDA analytics actually indicated that yes, maybe we could see a bit of a positive cheer at least in the US market. Did that work out for India is something to watch out for. But yes, a positive start, a muted positive start, is mildly positive start is what we could expect for the Indian markets. But with that, we are absolutely out of time on this edition of Market Cafe on ET Now. So thank you so much for tuning in to ET Now. It's a goodbye from Shreyansi, myself, as well as the team who put this show together. Don't go anywhere. The markets will take the action forward.